Hi, legends. Hope you all had a great weekend. And as per the thumbnail, are the bulls starting to take control? Will this bearish structure be the one that gives us the bullish momentum here to the upside, potentially kickstarting that all anticipated bull run back to the upside? Let me know in the comments what you guys think. A lot to analyze today. Let's dive right in. Say hi to the beautiful community. Mr. Crypto Gold Star. Hey, welcome. Chris, hi. Wait, mate. Crypto Big Brains, always appreciate your support here. Thanks for joining. Mustafa, hi, Devil, let's go. And Gizmo, hello, welcome to the live stream. Let's dive right in. Okay, let me share my screen over here. Okay, right, let me see if I'm live. Everyone is here watching. Okay, I do want to stress, legends, it is possible that myself and Andy will go live during the same time. Okay, it's just, we try and not go live during the same time, but sometimes, schedules clash a little bit, and we ultimately both trying to build up our own communities here. And I know there's a lot of you that watch myself and Andy, but you can always go and watch afterwards, right? Smash up the like on your way in. Let's get into the analysis. Morning, Devil and Legends. Frank, welcome to the live stream. Peros, hi, big man. Thanks for joining. Okay. I thought for today, let me just zoom out a little bit when we, starting off over here and see where we are from a macro perspective. So I'm here on the daily time frame on Bitcoin. And the scenario that we are all still watching, okay, is this one over here. Okay, so there's a couple of things that I really like about the scenario that so far is playing out very nicely. Okay, top of 3 is most likely over there. Okay, bottom of 4 is over there. So, I mean, we don't know how parabolic this move to the upside is going to go, okay? But we are at least expecting around about the $90,000 to $100,000 level here for this last fifth wave to the upside. And there is another bullish case scenario which I have shared that still carries probabilities, but this probability I would say is the most conservative Elliott wave probability. What I do like about the scenario, legends, is that you can see from the wave 1 that we formed over here and the corrective wave 2 that we have over here, you then take a fib from the low of 2 to the high of where number 3 ended, and you can count 5 waves inside of number 3. 1, 2, 3, 4, 5. Okay, completing the third wave over here. And this incredibly long, boring consolidation that we've been in, boring the crap out of everyone, retail is not here, is what we call a wave 4. Wave 4s from a macro perspective are very boring, tedious, and they can take an incredibly long time, even longer than the second wave correction over here, which was also boring, sideways, and then we had the explosive move here to the upside. Okay, the fifth wave in Elliott wave theory, just a little bit of education over here. The fifth wave, this last final leg, in any impulse, when you have 1, 2, 3, 4, 5, the fifth wave, like I'm highlighting over here, is also referred to as the retail wave. Okay. Generally, what happens, okay, when you have momentum to the upside, where you come out of a bear market, okay, you have those nice little momentums to the downside, and then you form your first wave, 1, 2, where you're now breaking market structure. You're making a higher high, okay, you're making a higher low, and then you make the third wave here to the upside. It is usually, in Elliott wave theory, from a psychology perspective, it is referred to, it is very difficult for retail to catch this wave, the first wave, okay? Most of your very experienced traders will catch an entry over here. Extreme experienced traders will catch an entry over here, and they will generally ride out the entire third wave here to the upside. Okay. Then it then bores, and you will have some retail coming into this wave, generally around the top of the wave, okay? And then it bores everyone, you go into that fourth wave consolidation, which we are in now, okay? That are we going down? We're going down to $10,000. There's nothing happening. It looks like we're just making lower lows again, okay? Basically a bigger bull flag to the upside, right? And then once this starts to happen, this is generally where retail, the dumb money, and I'm sorry to say that, but it's the truth, okay? This is where dumb money starts entering the market. Oh, it is not a bear flag. We are not coming we're not going to continue the bear market to the downside. We're actually going up. We're claiming all-time highs once again. Price looks strong here to the upside, and this is where retail generally enters inside of a 5-wave structure. So you have these structures on the 1-minute time frame up until the daily, weekly, and monthly time frames. Okay, so just a little bit of education is that this is where we expect all retail to start entering into the market, where the grandmas and the mothers and dads and everyone that's lost faith in crypto during the bear phase, okay, starts re-entering the market over here. And this is typically where the smart money that bought in over here starts taking profits. They take profits in the 5th wave. Okay, so will this time be different? So translating this back into the price of Bitcoin. Okay, let's go back here. This is where we expect, if this scenario, okay, is going to play out and we're not going to continue the bear market to the downside, and this is indeed a 4th wave that we're completing over here, this is where we expect retail to start entering the market again. And this is where the smart money, okay, generally towards the top of the wave, this is where they take profits. Okay, so we want to be early, right? We want to take profits where we need to take profits. And when we do get here, okay, we will analyze the price of Bitcoin together. We will look at some indicators that can help us to try and catch the top, well, close enough to the top so that we can start taking profits and not ride out the entire bear market again, not taking profits, and you're like, oh, I was up 4x or 5x on my portfolio and I didn't take profits. Now I have to wait for the next cycle. Okay, what I do like about this 4th wave over here is that when you take a fib from the low of 2 to the high of 3, the 4th wave usually has a maximum target of the 50% fib level. And we have tapped the 0.382, which is also a common 4th wave target, and we have tapped the 50% fib level. So, in other words, what I'm trying to highlight over here is that the low could definitely be in where we could see that this was the completion of the 4th wave over here, and this price action could potentially take us, okay, to that $100,000 area. So this scenario is still very much intact and is also at the moment the most probable scenario from a bullish perspective. This is, however, a very conservative Elliott wave scenario. There are scenarios that can go up to $250,000, $280,000. But I mean, you know, let's take it a step at a time and not run ahead of ourselves. I'm being conservative over here and I'm sharing this scenario because at the moment we can say that it's hit. We can see that it's hit a common 4th wave target. It's been a long consolidation over here. What you also want to see is that this consolidation is at least the length of this consolidation over here. And I mean, it's very easy to work that out, where you basically take a time fib, this one over here. Okay, wait, let me just zoom into this price action over here. Take your time fib from the start of 1, okay, and I'm going to take the start there because just want to make sure. Right, let's do it again. From the start of 1, sorry, doing this wrong, from the top of 1 to the bottom of 2, and now we place it on number 3. Now basically what I'm measuring now is to say that is this correction at least the same length as this correction over here, and you can see that we have now officially passed the 1-to-1 ratio over here. So yes, big tick, we have tapped the 50% FIB level, which is considered a maximum target for a fourth wave. The correction is now past the 1-to-1 ratio over here. I do have to point out that the low over here was made before the 1-to-1 ratio. But I mean, you know, the market, you never get it perfect, you get it close enough. So perhaps this was close enough, okay? It can. I just want to stress that the consolidation for a fourth wave can last even up until the 2 ratio over here, okay? So, I mean, we just now need to analyze, well, more locally, do we have probabilities of coming to claim the high and even go higher? Because it's the local structures that gives us the clues towards whether we're going to find continuation to the upside or to the downside. But now, okay, so there's a possibility that the low is in, definitely. And this is why so many people got excited with this low, because it's also a very common fourth wave target. It does not have to tap the 0.5 FIB level over here. Okay, so definitely one could argue that the low is in for now. We have tapped the maximum FIB wave target. The length looks fine. It's almost at the 1-to-1 and it's currently outside of the 1-to-1 ratio. So definitely a possibility that the bulls can start taking control from where we are right now. Okay, now this is where it gets interesting, is to say that, well, what does this structure show us at the moment? Okay, or this entire consolidation. I mean, I have gone through the Fibonacci retracement when you take a fib from the high to the low, 0.88 over here. You take another fib from the high to the low, double 0.88 over there. Another fib from the high to the low over here. We've also tapped the 0.88 over there. So multiple 0.88 taps, okay, although it looks like lower highs, increases the probabilities of still coming to take this high and even go to higher levels. So these are the bullish signs that the bulls need to look for to say that, well, do we have a chance for bullish continuation here to the upside? Now, the next question is, what does this structure tell you? And I think this is now where it gets interesting, and this is what everyone wants to know. Okay, we're currently getting a little bit of a pullback here on the price of Bitcoin. We had a nice pump here to the upside over the weekend. So let's go and analyze the price action over here. Also, remember, if you'd like to come and trade with me, the exchanges that I use is down in the description. Go sign up, come trade with me. This is where you qualify for the largest bonuses and discount on your trading fees by using the links down below, and it costs you nothing extra. Okay. I just want to see what CVD is doing here. I mean, yeah, we're just falling here to the downside. Bearish CVD. Okay, but we can go into the smaller time frames in a second. Let's go and look at Bitcoin on the 4-hour time frame. Oops. Okay, now we look at this structure. Just want to make sure that everyone's here. Sin Games, you're live. I love that you're live. Thank you so much, Mr. Sin Games. Welcome in the house. Right. Good morning. Now, legends, this is where it gets interesting. Looking at this structure. And I have said so many times, okay, I mean, nothing is ever guaranteed in the market, but every bullish structure to the upside, okay, has failed us. We've taken the lows. This was such a beautiful 1, 2, 1, 2, 3, 4, 4, 1, 2, 1, 2, 3, 4, 5, 4, 5, okay, and then we just took the low over here. Beautiful bullish structure here to the upside. Almost guaranteed that you're going to make a lower high and continue the momentum to the upside, and we took the lows. Okay, fooling everyone. And then also the previous structure and the previous structure, and so the list goes on. So the reason a lot of people are looking at this as a bearish corrective structure, and we definitely, okay, I see some people still calling for, we definitely still going to come take the low. This is a corrective structure. The entire structure is a corrective structure because it looks three-wavy. It looks like an ABC. It's a three-wave structure. Okay, this is all corrective, and we're going to tank down here. Definitely we're coming to take the low, right? I'm not convinced yet. So, I mean, there's still a lot that needs to happen for me to turn bearish, right? And the first level that I would like to see broken is the highs that we've smashed through over here. Okay, so when I switch on my daily analysis, we have had a very long consolidation area over here, okay, and you can see clear resistance where we struggled to break through, and eventually you break through, okay. So what I would like to see is an RS flip, okay. There's still a lot that needs to happen before we can come and take this low, because we broke through with nice green volume, okay, nice green volume supporting the breakout here to the upside. And now you could potentially come back for a retest where you now RS flip this area. So you're flipping resistance into support. You struggle, you struggle, you struggle to break this area. You break it with high green volume. It's absolutely basic technical analysis to come back for a retest for continuation to the upside. Okay, and I see a lot of people are eyeing this level for a buy-in. And I think we will get the bounce here, but there's something that we need to be careful of, okay? I do see a flash crash if the scenario plays out and we remain bullish and we do not take the low over here. And what do I mean is that I definitely see the potential of coming down and getting a beautiful bounce here to the upside, even to come and claim the highs over there. But this is where it becomes interesting, is because I still see this structure as a potential leading diagonal. And what do I mean by leading diagonal? I think Andy spoke about this on Sunday or Saturday as well when he did a video upload. Okay, and I've been mentioning this scenario for quite some time. This is basically the leading diagonal that I'm referring to, is that no one can count, or they struggle, you can force count, they struggle to count 5 waves inside of this structure. This looks awfully 3-wave, 1, 2, 3. But what I like about leading diagonals for bullish momentum to continue to the upside is that they have plenty of 3-wave structures inside of them. There's 3 waves, correct? There's 3-wave structures inside of this entire consolidation. There is so many 3-wave structures in here, it's actually crazy. But diagonals, leading diagonals specifically, is made up of 3-wave structures, where once the 5th wave is completed over here, okay, you then basically have a leading diagonal with a bunch of 3-wave structures inside of it, but you're still going to have one last dump to the downside where you have to, for bullish momentum to continue, we have to make a higher low and not take this low over here. So when I zoom in, okay, to this leading diagonal, this price action over here, just to see, well, where are we at the moment? Okay, this is kind of what I'm seeing at the moment, is to say that yes, definitely a possibility to still come down to the bottom of this diagonal. And you can see connecting this low with this low and all these lows, we have a beautiful trend here to the upside. Okay, beautiful trend. And this trend also coincides with the RS flip that I've just spoken about. So I would not be surprised if we come and fill this inefficiency, because this is an inefficiency candle and often they love to get filled, these inefficiency candles. And we've also tapped, and I'll go into the smaller time frame now, but we've also tapped the range low multiple times, which increases the probabilities of coming to fill the inefficiency, like we've done throughout this entire range. When you tap the range low, you just go and fill the inefficiency, which will basically be a 4th wave. Okay, so this is how I see this potential scenario play out. You create the 4th wave, you do get the bounce to the upside. You complete the 5th wave inside of this leading diagonal. And then you would expect a flash crash to the downside. But there's something very specific that I'm going to look for with this flash crash. Usually in leading diagonals, when the breakdown happens, okay, because most people will see this as a bearish pennant. It's bearish, okay? This is why some people still believe we're going down. It's a bearish pennant. And these moves and breakdowns happens extremely aggressive and fast to the downside. So what I would like to see is aggressive price action to the downside, almost free falling. We're going back to $9,000. That's what I want to see, the fear. And then it needs to stop with a bang. It really needs to stop with a bang. And that is where you get that explosive 3rd wave here to the upside that leaves most traders behind, because they believe we are in a 3-wave bearish structure. We're definitely coming to take the low, only to find support and turn around with a bang, but you want to see this price action being bought up extremely quickly. It needs to be fast. Okay, that's what I'm going to look for. Like what happened here. Here's also a leading diagonal on the smaller time frames. If I go into the 1 hour time frame, this is also a leading diagonal. Okay, there's also a leading diagonal over here. And this is exactly what I'm expecting on the bigger time frame to play out, exactly what played out over here. Okay, this dump didn't go as low, but I mean, you get the picture, is that you form a leading diagonal with a 1, 2, 3, 4, 5, A, B, C, and you continue the momentum to the upside. Right, now looking at the structure that we're currently in is just copy and paste on a bigger time frame. Right, so the structure started with a leading diagonal and is most likely, for now, the scenario, or I would say the most likely bullish scenario is this leading diagonal structure. There is another scenario which is more bullish. I think it carries lower probabilities because there's a couple of things wrong with that scenario. So for now, this is the scenario that I'm watching, is to say that I believe, and when I watch some of the other YouTube influencers and some of the other professional traders, everyone is expecting a bounce over here, and I think they are going to get the bounce. Okay, but I mean, we can trade the momentum down, we can trade the momentum up. We just need to know where to take profits. I do believe that we're going to get this flash crash that's going to scare and let all these people exit their positions, and they're most probably going to have all their stops here below, above, believing that the bull market is going to continue here to the upside, and then it stops all of them out. It scares everyone out of their positions. We're definitely going to come and claim the low. We're going back to $9,000, $40,000, $41,000 to potentially form that higher low, okay, where you could grab the liquidity below this pivot or even close above like we did over here. We closed above, and then for the rampage here to the upside. So I am looking, okay, to buy, yeah, from a spot perspective, or to add from a spot perspective. Right, but I would like to see some nice, okay, the things that I will look for is, and I mean, I will be here streaming and educating, and as the price dumps, we will analyze the situation together to say that, well, does the scenario still carry high probabilities, and is it time to buy? And right, I am not convinced that this is going to be the ultimate buying zone that everyone is highlighting. I do believe that we're going to get a bounce, but I know you're going to get, as always, the market makers saying, too many people bought here. There's too much liquidity here at the bottom. Let's go wipe them out and then continue. Okay, fill up our bags, because remember, larger players that trade with millions and hundreds and millions and billions of dollars, they need liquidity to fill their bags. Okay, so I wouldn't be surprised to see a flash crash here to the downside and then continuation to the upside. But I would like the fifth wave to be in, and I would like for us to lose the trend over here, okay? And then we can go and measure where's the FIP levels from the low to the potential high. I mean, we need the price action to be finished over here to do a proper FIP pool. But for now, okay, this pivot looks like a beautiful pivot to go and grab liquidity to get momentum back to the upside. Right, smash up the like for the education over here. Let me know if you guys enjoy what I'm sharing over here. I mean, Mr. Tortuga, I see you are in the house as well. Welcome, welcome, welcome. And for the bears, okay, I am going to go and share a bearish case scenario as well, because we have to always keep an eye on both the bullish and the bearish case scenario. I love this disbelief rally. Timing-wise, looks good for continuation. Yes, it is definitely a disbelief rally over here. And okay, I told the legends in our Discord community this morning, if you had to put a gun to my head, do you believe that the low is in? I would say, I think the low is in for now, until proven otherwise. Okay, right. But I'm not saying that it's just going to do this. Exactly what I've explained, where we still can come down lower from a leading diagonal perspective. And let's see. Okay. So maybe before I dive into the bearish case scenario, let me share the most bullish case scenario that in my mind carries a little bit lower probability, but I mean, there's always the possibility that it can play out. And it's this structure that I'm looking at. That's the leading diagonal, most bullish. Here we go. Okay. And it's basically this structure over here. You can see how insanely bullish it looks. Okay. Where you can force count 5 waves inside of the structure. And this is the first thing I don't like about the structure. You now have to go and force count things. And Elliott wave theory clearly states that when in doubt, zoom out. And if you can't see clear 5 impulsive structures to the upside, it's most probably not 5 impulsive waves. If you have to start zooming into smaller time frames to go and force count something, more than likely it's not the scenario that you need to look at. Okay, so if I zoom into the 15-minute time frame over here, okay, you can see that I can force count 5 waves in here, where we basically have a 1, 2, 3, 4, 5. Not pretty, but you can. Okay, where you can count 5 waves in this structure. Then when I go back onto the 1 hour time frame, so you can see that's the first problem that I see over here, over there. Not invalidated, it just lowers the probabilities. Okay. Then what you would like to see, and this is now the second problem that I see over here with this scenario, and maybe this scenario will play out and surprise all of us, where we then have a WXY correction to the downside, which completed wave 2. Now what you want to see is a third wave here to the upside. And this is the second problem that I see over here, is that generally speaking, third waves are extremely impulsive and explosive to the upside. This is very rangy. This is very rangy, slow grinding price action here to the upside. And I don't see a significant. So what you want to see with a third wave to the upside, you generally want to see green volume increasing. And I don't see green volume increasing. So now you guys can see that why this scenario could definitely play out, but why it carries lower probabilities, where we can see a 1, 2, and a 3 year to the upside that can take us to $78,000. So just had to highlight the scenario over here, and just a couple of things that I'm not too happy with it at the moment. So we can take this out and now switch to the bearish scenario. Okay, and then we can go and analyze the price action here in a little bit more detail. Just want to see what CVD is doing over here. Okay, it was quite aggressive bearish CVD building up. You can see between this pivot, okay, almost made bearish CVD. Where price is here at this pivot, almost made bearish CVD, but against all of these pivots, Bybit just went absolutely insane here to the upside, forming bearish CVD against all these pivots over here. And right, let's see how this plays out, which for now the probabilities are still higher to take the low before we take the high. Let's see how this plays out. Right, that's just a little bit of analysis there on the smaller time frames. Hi, Elizabeth. Welcome to the live stream, Mr. Sin Games. Maybe the WXY is not finished. Yes. So, and this is the bearish case scenario that I'm getting to right now, is that WXY that everyone is keeping an eye on. Okay. So we just have to be prepared for this scenario over here. Okay. For this scenario to be finished, Y wave needs to be over there. And when I take a fib extension from the low to the high of W and I drag it to X, we have hit a common Y wave target. Very, very common Y wave target at the 0.618. And this is where we're currently struggling. Okay, so for the bears, your corrective structure is potentially coming to an end, right? Where you could lose the support, maybe you bounce, you get a lower high, and you continue the momentum to the downside where the target is the low. Okay. The one thing that's interesting about that scenario is that when I go onto the 1 hour time frame using CVD, okay, just look at the 1 hour time frame and zoom out here. When I look at this entire structure, you can see that we have continuously made bullish CVD, but okay, we have now taken the high. So as we were grinding up here, we continuously made bullish CVD, but we have taken the high. So the bullish CVD has played out. Okay. So it is very important to observe locally what we spot over here, because, right, let's go on to the 4-hour time frame. I mean, look at this. We have to acknowledge, I just have to point this out, with all these drops that we had here to the downside, all these drops, and the high being over here, which we have not claimed, you can just see how CVD has been free falling to the downside. Okay. Of which the target is still the high. So you can see that smart money, whales, people that are accumulating Bitcoin are still aggressively buying Bitcoin during this consolidation phase that we find ourselves in. Okay, of which the target is still the high. So let's see how this plays out. Very interesting area where we are at the moment. So for the bears, definitely a possibility where maybe you do get this bounce. I think there's a lot of limit orders and buying pressure in the zone if we do get there, where you make a lower high and you fall here to the downside. Okay. It's also important to note, and I mean it's never easy and nothing is ever guaranteed in the market, that Y can also go to the 1-to-1 extension. Right. Which is basically the top of the range where you don't claim the I again, you don't claim it, right? Everyone looking for us, okay, we're continuing the bull market, we're not going to claim the high. We maybe tap the top of the range, the value area high since March, we tap it again, and we fall down. Okay, so I mean, not even Elliott wave theory can give us clear answers, right? That's basically what it's come down to, is that you need to have a trading strategy so that you can trade the momentum to the downside, the momentum to the upside, without worrying or caring whether we're going up or down. It's all just about levels of confluence, spotting that local bullish or bearish CVD, and placing a trade with good risk management. Okay, that keeps us in the game. Because even from an Elliott wave perspective, we don't know. Right. The one thing I do want to highlight is that the reason I think, purely based on technicals, that the bulls perhaps have a stronger chance for momentum here to the upside than the bearish case scenario is that if I switch off everything over here, let's just go look at the weekly time frame. This is what looks really, really great at the moment. If I look at Bitcoin on the weekly time frame, okay, and I go and draw my fixed range profile, we have acceptance back inside the range with a closing weekly candle, and that's usually a very strong bullish sign, is that we had 2 or 3 weekly candle closes below the value area low, and now we have the body of an engulfing weekly candle close inside the range, which tells the bulls that any pullback is potentially a great buying opportunity, expecting momentum back to the upside. So this weekly candle that has closed inside of the range is definitely a bullish sign from a macro perspective, from a larger time frame perspective. Okay. Right, let's go back here onto the 15-minute time frame. Okay, now I want to talk about where we are right now. Okay, I think the 1 hour will actually work great. Take this out the way. So, what I'm looking at over here, and I do think the probabilities at the moment are still higher to come and take the low before we take the high over here. And the reason I say that is that I want to see if there's a couple of examples that I can show you guys. Okay, maybe the clearest example that I can use is over here. The range low and the range high. When you have a massive dump to the downside and you create your first high, or it could even be that one, okay? This is the range high. When you tap this level the first time, you want price to move away, but we've tapped it multiple times. And the probabilities, the rule of the strategy is you coming to fill the inefficiency, which we did over there, and we filled it over there. Because here was another range low, okay, where you have a dump to the downside. The first high that you create, you tapped it multiple times, you increase the probabilities of coming to fill the inefficiency. Now, when looking at this structure, okay, we have tapped the range low multiple times already. What you would have liked to see, which we did get, usually the first tap is a nice long entry or a short entry, depending on whether the wave is coming from the up or to the downside. But in this case, we now have a range low that formed with this pivot over here. You tap it for the first time, and you can see beautifully how we moved away, and you go and claim the high. But now we came back down, and we have tapped it multiple times, which increases the probabilities of coming to fill the inefficiency. And this is why I think the probabilities are still higher to come and claim the low first before we claim the high. Now, this is where things are going to get very interesting, because when I zoom out into the structure, this is where we have, take all the scribble out the way, switch on my daily analysis. Okay, this is where we have that support. I just don't know if we're going to fall this far, right? But this is basically the entire inefficiency. From the pump, where the pump started, this is basically the entire inefficiency over here. So for now, because we have tapped the range low multiple times, we are now increasing the probabilities of coming to fill the inefficiency. Okay, you do not have, I just want to highlight, you do not have to fill the entire inefficiency, right? Usually about 80 to 70% of filling the inefficiency is good enough, because we still have this wick here to the upside, which could provide support for a bounce. Right, but I mean, just keeping things simple, you've tapped the range low multiple times, you're increasing the probabilities of coming to fill the inefficiency, and this is maybe that downwards momentum, okay, that's going to give us the RS flip that I've spoken about during the beginning of the live stream for potential bounce here to the upside, and maybe even coming to claim this high. And then we have potentially that flash crash to the downside. Okay, that is basically, let me go through some comments over here. I think I've shared so much education and alpha over here, going through the larger time frames, the probabilities. Let's see. Best alpha in the game. Thank you, Ashton. I appreciate that. Alden, let's go Bears. Just deal. Hi everyone. Sin Games. What's the retrace of the W? That's a good question. The retrace of the W is a maximum target of the 786. Okay. Is it the W? No. The retrace of the W. What do you mean the retrace of the W? X. Okay. Is basically your X wave. So when you have a W to the upside, which has to be a three-wave structure, okay, W, X, Y are all three-wave structures. So this is three-wavy. That's where you get W, okay, and then X has a maximum target when you take a normal fib from the low to the high, a W or a X, sorry, an X to the downside, the X, okay, has a maximum target of the 786. Right? So it can come to the 50%, 382, 618, 786, but if it taps the 0.88, the X is invalidated. No more WXY. Okay. And then you can go, and obviously you can go and calculate the Y wave target once the X wave is in. Okay. So that's the easiest way for me to explain it, but I don't know how to calculate it. I think when I say I don't know, it's you can't calculate the W wave. You have to wait for it to be in. Okay. Because that's your first three structure wave to the upside. Right. Let's go through some more comments over here. Perfect now, I think bull market. Alison, you're also leaning more bullish at the moment. Just not a place to trade for me. Need to see confirmation now. Yes, I mean, if you are a patient trader sitting on your hands waiting for this price action to play out, What you would want to see is, and I mean, traders with larger amounts of money as well, traders that trades with millions and hundreds and millions of dollars, they are not trading the price action inside of these ranges. Okay, they sit on their hands, they see the pump, and then they're like, okay, if we get proof of support in this zone, I will potentially enter. Okay, so they will wait for the price action. They will trade from the area of interest, not to the area of interest. So for those that are shorting the range over here, you are trading to your area of interest. Okay, so expecting a bounce in this area, you want to ride the momentum here to the downside. So this is where patient traders will most probably consider entering along, depending on what they see from a technical perspective. Right. I do think that this point of control looks great as well. You know, the entire range since March, yeah, there's a point of control as well. Also, what's interesting is when I zoom into the 4-hour time frame, okay, this is where the planets starts aligning a little bit over here as well, okay, is that when I take a fib from the high to the low, we have just front run the 786. I do like that the 786 has confluence with those pivots over there as well. I also like that there's a potential harmonic that can still play out. Okay, I also like that when I switch on the leading diagonal, okay, the fifth wave has confluence. This little fifth wave has confluence with the 786. Where we come down, you find support, you claim the high, again, you claim the highs over there again, right? And then you get the rejection to the downside, where the harmonic plays out, the leading diagonal plays out, and you have confluence with the 786, you claim the liquidity above the highs, and you get momentum here to the downside. So there's a whole magnitude of confluences that are starting to align over here. The question is, if this plays out, right, this is what we want to see. Because even from an Elliott wave perspective, whether this is a leading diagonal or whether this is still the Y wave that is forming here, the Y wave in a WXY that's going to complete here by the fifth wave, this is going to be the biggest question. Okay, are we going to make a higher low, or are we going to take the lows and come back down further? That is the conundrum. This structure is going to be very, very interesting. And I've told and I've shared with everyone what I would like to see in the structure. I would like to see, as we are dumping here to the downside, I would like to see some insane bullish CVD forming against the C point and as prices forming, and also against the A point. Fresh CVD needs to build up, okay? I want to see some consolidation. I want to see price slowing down, okay? Slowing down, showing that it's getting exhausted and it's going to continue back to the upside. I don't mind getting a late entry, because I know even entering over here or entering over here, if you get that explosive third wave here to the upside, okay, it doesn't matter if you enter in this area, you are still going to be profitable on the way up. So depending on what your proof of support or proof of resistance is, MACDs, volume, RSI, stochastic RSI, we will analyze the price when we fall down here, or if we do fall down here. Right. You promised to look at the Wyckoff. Yes, I had a look at the Wyckoff schematic this morning, and to be honest, it's not a nice match. Okay. And I know some traders are talking about the Wyckoff schematic, and maybe perhaps tomorrow during the live stream I will share with it what my findings this morning. I purposefully didn't share it in this live stream because there's a couple of things that doesn't match up when you look at the Wyckoff accumulation zone, okay? And what is particularly confusing about the Wyckoff schematic is because you want to see that creek here to the downside. This is referred to as the creek. Okay, and this should have been the low. The fact that we made this low over here, okay, doesn't fit the schematic properly, because this should have been the low. From a Wyckoff schematic perspective, it should not have made a lower low over here. It should have made a higher low over here. So because you basically have the creek, if I remember, the creek to the downside, then you have the spring point. This is your spring point, and then you need to make a higher low for continuation to have a more or less one-to-one match with a Wyckoff accumulation schematic. And this makes it a little bit confusing. So, I mean, you can force it, but I think based on Elliott wave theory, the scenarios that I've shared over here, the probabilities are still higher to sooner or later come and take out this high over here. Okay, whether you want to use Wyckoff, whether you want to use Elliott wave scenarios, right, it would be nice just to make this higher low over here. Okay, then we know, because even according to the Wyckoff accumulation schematic, is that we should not be making another lower low. Okay, then it's invalidated. The fact that we already made a low over here, for me, invalidates the Wyckoff accumulation schematic. I mean, some traders argue that it still has a chance, okay, where this was just the final liquidity grab, stopping out everyone that was watching the schematic like a hawk, okay, just scaring the crap out of them. And now it's actually going to play out where you have to now, according to the Wyckoff schematic, you have to make a lower high over here for it to still be valid. Okay, legends, that is basically what I wanted to share today. Okay, so from a smaller time frame perspective, okay, let's zoom into the 15-minute. And it looks like we're getting the dump to the downside. Okay, I did say that purely based on technicals, the probabilities were still higher to come and claim the low before we claim the high. And now we're getting a nice little dump here to the downside. And I wouldn't be surprised if this is going to be the dump that takes us all the way down to come and fill the inefficiency, because we have tapped the range low multiple times, increasing the probabilities of coming to fill the inefficiency. Now, this area has to hold for support, because if you're going to get acceptance back below this beautiful resistance that we now finally broke out of, okay, it's not going to look good, right? You break down, you retest it as resistance again, and then you continue the momentum to the downside. So this area has to hold, and it's fine to get wicks to the downside, because that often happens. Okay, you get price momentum here to the downside. Okay, it starts slowing down, it starts consolidating. That's the first proof of support that I'm waiting for. Price needs to stop, price needs to start consolidating. Okay, and then it's quite natural when you see the consolidation to get that wick to the downside. You grab all the early longs, people that are longing in this area, you stop them all out, because maybe they have their stops below this low over here. You stop them out, and then you get upwards momentum again. So quite natural to see those big wicks above support and resistance just to grab liquidity. Okay, but it needs to be bought up fast. That's the trick, you know. You get the wick, it gets bought up, it leaves the wick behind, it doesn't leave a candle behind. Okay, so it needs to, on the higher time frames, 4 hour, 8 hour and above, it needs to have a wick behind and not a body close below this level. Very important. Okay, legends, smash up the like for the education over here. Remember that the exchanges that I used for my daily trading down in the description, also your way to support the channel. Go sign up, come trade with me. And also remember, down in the description of, well, after the live stream is done, go post a comment, okay, for any trading question that you have, perhaps an altcoin that you would like me to have a look at. And like the person that just asked for the Wyckoff schematic, sorry, go and post it in there so I can make notes and I don't forget to talk about it, right? Okay, so go and post whatever you want to know from a trading perspective, whether you want me to go and analyze an altcoin, look at Wyckoff's schematics, right? Just drop a comment. I will go look at it, and then I will include it as part of the next live stream. Thank you so much for joining. Appreciate you all being here. Smash up the like on your way out. Until the next one, cheers for now.